So in the last video, I covered how banks choose who get access. In this video, I'm going to show you what that looks like in real life. I'm going to go from some notes that I drafted up to give you illustrations of two clients and how the bank will make the decisions based on the data points of those clients. For those of you who are new, this channel is dedicated to help you master relationship banking, make those relationships profitable, and leverage your banking relationships to increase your net worth. Now, in this video, again, I want to give you a breakdown on what this might look like so you can have a clearer picture and put yourself in the proper position. So let's think for a second. We have two people, same credit scores, same income. One gets approved, one doesn't. This is probably going to hit home for many of you. So this isn't random. It's not unfair. It's structural. Let's take a look at these two client scenarios, okay? So client A, stable balances, one primary bank, predictable cash flow, okay? Client B, same score, more movement, fragmented banking, and recent behavior changes. Let me run through that one more time for you. Two clients. Client A has stable balances, one primary bank, and predictable cash flow. Client B, same score, same income, more movement, fragmented banking, recent behavioral changes. All right. The score is the headline. The behavior is the story. Remember that as we go through this. So why did the system favor one over the other? Let's revisit the last video's talking points. Trends over snapshots, relationships over randomness, predictability over perfection. This is the overview of how banks make their decisions when they're reviewing client applications. We're all taught credit. We're all taught income. We're all taught these specific flashpoint data points that banks find attractive. They matter. But there's a lot of infrastructure underneath those data points that nobody else talks about that you're getting on this channel. So keeping that in mind, trends over snapshots. So what that basically means is credit behavior over credit score, relationship over randomness. What that basically means is you're building a consistent storyline with a particular financial institution over randomly financially functioning erratically with various institutions. Predictability over perfection. One massive deposit, no other activity. Smaller deposit, frequently over months. Big difference. Banks don't lend to scores. They lend to patterns. You should get that one tattooed. So how does this affect the wealth gap? You know, I like to break this off into segments. People who understand this adjust early. Everyone else keeps trying harder and getting denied. When you understand the talking points I just gave you, you can make the adjustments early, ideally before you apply, and position yourself effectively. It takes longer, but you get better results. Everybody else just keeps running their head against the wall and getting denied repeatedly, and then get mad at the banking system. So just to give you an explanation, first access leads to leverage. Leverage compounds. Confusion delays access. What does that mean? First access leads to leverage. If I get access to the capital first, whoever's trying to do what I'm trying to do, I'm going to beat them. I have an advantage. Leverage compounds. It allows me to amplify whatever activity I'm trying to get into. If I'm real estate investing, if I have access to great capital leverage, then I'm going to have more access to amplify building out a rental portfolio. Same thing goes if I'm looking to invest in a business. If I have access to consistent, stable capital, my ability to scale and grow my business is going to be that outside and beyond what my competitors can keep up with. Confusion delays access. If I'm erratic, unpredictable, if I'm shaky, if I don't consistently lock in and develop a relationship that allows a storyline to build, that confusion leads to a denial of access. It delays access because at this point, banks are looking like, I don't know who you are and what you're about. I'm a pass. They're not always about growth in itself. They're about mitigating risk. There is a difference. So what you should do differently, still no hacks. No hacks. We just focused on clarity. All right. Stop chasing point swings. Stop chasing point swings. Your credit score fluctuates dramatically. Like, you need to get that stable, because that's exactly what banks don't want to see. Stop opening accounts randomly. Oh, I banked there when I was in high school. My parents brought me there back in the day. It's the closest one to my neighborhood or my job. No. Like, what do they offer? What are they going to provide for my financial needs now, tomorrow, and the day after? In segments. What are my goals, and how does this financial institution align with that? Stop banking randomly. Bank intentionally, for God's sakes. Start thinking like a bank sees you. It's okay to have to qualify for something. I know in today's world, we have a lot of ego, and it's just like, I'm already great kind of thing going on. And, banks already have my money. What do I need to? No, that's not how that works. That's not how that works. You need to start understanding how you're being viewed by this financial institution and actually give a damn about how you're painting that picture. It matters. And if you want to be stubborn about it, you can stay broke. So your goal isn't a higher score. Your goal is a clearer picture. Say it again. Your goal is not a higher score. It's a clearer picture. It's a cleaner picture. That's your goal. So in the next video, I'm going to break down the exact behaviors banks flag as risky, even when your score looks good. That's what's coming next. So make sure y'all stay tuned in for that. Comment down below and let me know what you learned from this video. Comment if you felt seen from denials you've experienced in the past, or comment down below if you felt seen from having these behaviors intact and these viewpoints intact and having success with financial institutions. Comment down below and keep the conversation going. So all my pioneers, welcome back. To my new viewers, welcome in. Like, comment, share, subscribe, support the videos so the channel can continue to support you. Get in the description section down below. Time with me on Instagram and TikTok. And other than that, for those of you who are new, I am an active relationship, private client, small business banker. I've been in the field for 14 plus years. I have an active state mortgage loan originator's license, FINRA investment license, life insurance license, as well as small business certified, managing a client book relationship of $25 million plus between consumer and small business deposits and investments. That's not even talking about the lending side. So you're getting this information from somebody who's in the field helping clients leverage this exact information to build real wealth. So I want each and every one of you to stay focused, stay in motion. I'll see y'all soon.